Well, we're at a very interesting point with the American market and the global market. Always has been a big connection there. Well, I've been talking about QT, which is the equivalent of reverse QE for a long time, saying this is what's pulling the market down. This is what's the reason to not be in equities. Well, the Fed has buckled on that, and they've stated that they're going to bring it to an end shortly, and they're not going to have it as a big deal for years on end. And the normalization might not actually happen at all, and they might be quite happy to have a big balance sheet up in the $4 trillion for America. Well, that's huge news. Donald Trump did push them even via Twitter to say stop doing the QT. Well, looks like they were listening. Looks like they plan to stop. Well, that means that the crash or sideways trade direction of the market, with a crash more likely, well, that's kind of been put on hold or even been dispensed with it entirely. Because without QT and without QE, the market should definitely go sideways. Now, it could go up, of course. Good things could happen. I mean, we could be in a situation where we're not in a trade war globally, and we could go back to having a bull market. But I don't think that's what we're going to see. What we're going to see is a sideways market for some time, which is fine because you simply buy the dip and you sell the rally. Because what this proves is the Fed really, really, really cares about the stock market. To the Fed, that is the litmus of how it's doing. So it is there to defend the stock market as a way of defending the economy. The temperature gauge for the Fed is the stock market. So whenever the stock market looks like it's going to crash, like it did earlier on this year, like it did a year ago, they will step in and they will sort it out, or at least try to sort it out, which is a kind of bottom to the market. You just have to know where that bottom is, because the market will go down there, and then of course they'll step in and it will go up again. So that is the major call now. Where is the bottom of the channel? Where is the top? And when to buy and when to sell? Well, you buy when the market dives because the Fed will step in, and you sell when it rallies because they're not going to be making the market go through the roof. So the roof's in, the base is in, so it's now swing trading into further notice. I should suspect about now is probably the time to think about selling, although it might go back to previous highs in the circumstances. So that fear of crash has gone from almost a certainty to a low probability, but probably so is a strong rally. So we're in that sideways trade now, and it's a good place to be because you've basically got Big Brother watching and looking out for you. So whenever you're in fear of losing all your money, they're going to step in and bail you out. So good news, the Fed is going to bail us out whenever the times get sticky. What more do you need to make a lot of money?